September 29, 1980, Stevie Wonder released Hotter Than July. Let me tell you, had a ton of hits on it, including that we just heard, Master Blaster. I got to tell you, though, this July promises to be even hotter than that album. With me now, counselor to the Treasury Secretary Joe LaVorgna. First of all, Joe, my man, congratulations on a new gig.
Thank you, Charles.
Yeah, so
pleasure, buddy. Thank you.
The current Master Blaster, pushing the envelope hard. We got a bunch of stuff coming out in July, deadlines. We got to start with that big, beautiful bill. You know, I'm reading this morning, and it feels like there's been a lot of little setbacks, or at least they seem like setbacks. Where are we right now in the big, beautiful bill?
We're making progress, Charles. These things, as you know, there's a lot of people involved in the process, but we've been pretty good. Things are moving along, and I'm very optimistic that we're going to get something done soon. So we'll get that bill, and of course, we're going to reap the benefits of it, Charles, because when people talked about the uncertainty, they're always worried about the tariffs, which, as you know, in my prior role, we talked a lot about. The tariffs were not really a problem. It was really, certifying and getting this bill done. So when the bill is done, that's going to open up, we think, a wave of investment spending, which would be very additive to the economy through much faster CapEx. We've already seen industrial production pick up pretty dramatically, and we're going to get much better growth. So we're moving in the right direction, Charles. Yeah,
I tell you, even dyed-in-the-wool market bears know that this whole thing, once we check that box, it's going to be hard to go against this. I'm not sure what they're going to do with some of the things the Senate parliamentarian pushed back against, but, the July 4th, it's looming large. I want to also mention something else looming large, and that's the Federal Reserve. Powell's no longer data dependent, but today you have Bowman. She joined Waller saying cuts possible in July. I know the administration thinks that the Fed should be cutting. What is the argument for Fed cutting right now?
Charles, let me just say, with respect to Vice Chair Bowman, she's been working with Treasury Secretary Bessent on the SLR reform, and we're making very good progress on that. That'll be hugely additive to the economy because it'll free up lending capacity for banks, loans to Main Street. So that's a real positive. I believe the Fed votes on that this week. With respect to monetary policy, I'm going to defer on that, Charles. That's monetary policy is the Fed's domain. What I can tell you is the inflation data have looked great. As you know, 3 months in a row, we've basically performed to the downside from expectations, meaning we've undershot inflation, which is incredible. There's been no tariff effect. And with the one big, beautiful bill coming into place, with productivity increasing, we get strong non-inflationary growth. That'll be very constructive for interest rates longer term. So there's a lot of optimism there.
I want to kind of stay with this bank thing, right? The Federal Reserve, it pays banks a lot of money, essentially not to lend money. I know Senator Cruz put out there that maybe they should stop doing that, in the sense that would free up money to go to the Treasury. In the meantime, banks themselves would have this cash, and maybe they could lend to Main Street. Something like that would certainly help the CBO scoring of the bill, wouldn't it?
Well, Charles, the thing is, the interest on excess reserves, that was passed through Congress legislatively, that at the time Chair Bernanke was pushing. So that's really going to be a legislative concern by people. So I'll just leave it there.
Basel III, that deadline's coming up soon. The bank stocks came out the gate strong this year. Knowing that the administration focused on deregulation, particularly the overburdening of banks. Anything on that front?
Well, you've seen, I think you're exactly right. The administration has taken a very pro-growth, deregulatory, smart business approach where they're not adding extra cost. The SEC is doing the same, making it less invasive for companies to have to report things that were economically inefficient. So, and again, that's also, I should add, part of that one big, beautiful bill, Charles. As you know, a lot of good energy legislation in there to essentially get government off the private sector back to generate low prices and to give consumers and other businesses more of what they want, which is good, strong, old, non-inflationary growth as we had under Trump 1.0.
So Joe, today we've got the dollar ran up, DXY and other ways of measuring the dollar higher. Treasury yields are coming down hard. Pretty soon we could have a 3 handle on the 10-year. You and I had so many conversations this year about the end of American exceptionalism. I'm hoping that this starts to put that to bed, don't you?
Well, Charles, in real broad-weighted sense, the dollar is incredibly strong. It's the reserve currency. The economy is outperforming all the other industrialized economies on an outright GDP and certainly GDP per capita basis. So the long term is really optimistic. And once we codify the Trump 1.0 tax cuts and extend those and make parts of that permanent, we'll reap the benefits, Charles, just as we did the first time, and that'll be very accretive to U.S. assets, the dollar, financial markets, and obviously interest rates. You'll see interest rates come down.
All I'm saying, Joe, is that since you've been down there, the yields have only come down. Everything's turned up. Everything's gone right.
Well,
the dollar's gotten stronger. The
Charles,
yields have come down.
Charles, that's President Trump and Secretary Besson. I'm just happy to do my little part, but thank you.
Yeah, we appreciate you, man. Thanks so much, and again, congratulations on a new job.